Hi guys, so today I am going to share a more in-depth guide on how you can catch an impulsive move when it comes to trading gold. In my previous video where I talked about how you can take trades and someone requested I should do a more detailed video on my strategy. So I am giving this free of charge. Um, Normally you are supposed to pay for this, but I'm giving it free. This is for you that requested for this, and all of you out there who wants to be financially free. This is for you. If you pay close attention, keep practicing, keep following the video. Anytime I upload, make sure to be the first to watch. I guarantee you will begin to make profit, because I realize that a lot of people are afraid of trading gold because of all the fluctuations that happens and the high volatility with gold. But I tell you, gold happens to be the simplest pairs to trade, in my own opinion. Though for now, I have a strategy which I call high-low break. Now, I am going to give you a typical example of what I mean when I talk about high-low break. So, as you can see right here, we have a high here. This is 4 hours time frame gold. Like I told you, I do my top-down analysis starting from 4 hours, and then I scale down to 15 minutes to take my entry. So, this is 4 hours, and this is high right here, and this is low. Okay, so this is my high, this is a high, and this is a low. Now, with this, today, as of the time I am doing this recording, this is Saturday. So if I'm able to upload it before Monday, you will realize that you are going to make money with this. Or even if you don't follow immediately to make money with this, in the subsequent time, you will check to finally grasp what I'm talking about. So as you can see a clear M pattern. Now this M pattern will only sell if it happens to break this this line. If you break this line with the body, then know that we are going to be selling. But if we get to this place, even pass it, and then move back and did not break this line, then this M pattern will turn to W. Say for instance, if it does something like this, this is like a candle. This normal red candle, which is supposed to be a sell candle, right? So if this candle can sell like this and close with the body, then we are bearish. So the next thing that will happen is that it will retrace back to here before it continues selling. But if it did not break with the body and do something like this, leaving us with weak, something like this, then know that this market is going to continue buying. So what will happen is that as soon as it passes this line that you have put, and then we'll be watching the next candle that will form, enter buy aggressively, and then you target this high. Your first take profit can be somewhere here, the second take profit, then this high, and then when it breaks this high, this very high, because this is the highest high, this high is higher than high, and this is where you're looking at. So if it breaks this high right here, because as you can see, it was not able to break it initially, which is why it started selling massively like it did. This is retracement for now until it breaks this line. If it breaks this line, then it's going to push all the way to this line. This low is not all that valid because it didn't break any structure. If it breaks this one, it means it's coming here. This is the way you're looking at. Yeah. So if it breaks this line, that's why it's good you put line to guide you. So if you break this line with the body like so, like this, then know that the market is going to push down further to this zone. That is where we are looking at. So if it breaks it with the body, then that's when we will say that we'll continue to sell. We'll now move to the next level, to the next zone. So but if it did not break it, it gets here and then reverse like this, then we'll continue to buy. So the first target should be here. This is your first take profit, retrace back. Second take profit here, retrace back. Third take profit here, retrace back. Fourth take profit is here. Then that's your final take profit before we can know the next move the market is going to do. Is it going to break this? If it breaks this high, then it's going to 3,000. Then it's going to 3,000. So, but if we did not break this high, then it's still gonna come down, go up, come down, go up. So, but your target should be here. So, like I was saying, high, low, break. So, since it did not break this high, it didn't break it. So, the next place we are looking at for it to break is this low. If we break this low, it means once you break this low, just enter sell. It's going to sell up until this zone. One thing with gold is that gold respects zones. So if you have done your market structure very well, and by the way, if you don't know how to do market structure, you can watch my previous video. I will be putting the link on this video on how to do your top-down analysis, which is market structure on gold, simplified. So if you do your market structure very well, you will know that the movement of the market, you know the buyers. So once you have determined your buyers, then you will know that the next thing you should be looking at is zones. So where the market is right now is a very good place to enter for a buy. So if the market opens on Sunday, enter a buy. That is how to take the risk. So if you enter a buy, your stop loss should be below that candle, below this very candle. Otherwise, you wait for the first candle to print to know, is it going to go up. If the next candle prints and it breaks this candle, then it's going to buy. It's going to be a buy. So the thing is that if it breaks this line, it will push to this line. Then after it has pushed to this line, if you break this line, then it will push to the next zone, which is this zone. It will push to this zone. If it breaks this zone again with the body, then it will move to this zone. So your job is to be watching out. Is it breaking zones? Is it breaking all this line you have put? If you break this line with the body, then you enter a sell to this line. And you're watching again. Is it gonna break this line? If it breaks it with the body, then you enter again, and your take profit will be here. So like that and like that. But if it did not break, let's take take for instance, this is a current market. This is where the market is at. If market opens and it push down like so, and later melt back like so, leaving here with wick, then just know that it's buy. Just enter buy immediately, and your stop loss will be below this line. So you enter a buy. What I am expecting and I'm anticipating for this week is to look out to know if this market is going to break this line. But if market opens and it breaks this candle, then it's buy. It's going to buy all the way up. So, but the thing is that at times it may break this line and then it comes back again to this place. So that is where you now scale down to 15 minutes. Remember, this is 4 hours. So what you will do is that once you have done all this analysis on 4 hours, why I'm not going to daily for now is because this is the highest high. There's no other high again. So assuming there's other high, so if you go to daily now, you see that this is the highest high. Yes, this is the highest high. So no need of going to daily, monthly, or weekly. So this is where the market is at now. So the next thing you will do as a good trader, or when market opens and you have established that, oh, this is where market is, then you go to 15 minutes to refine your entry. Now you have gotten your bias. Your bias is buy. You're looking at buying. So what are you going to do? So look at how it is on 15 minutes. So I actually like to, do my tutorials with current market so that it can give you a clear understanding and make it easy for you, so that when you go back on your own to check your chart, you can align and follow immediately. Not that someone is doing tutorial with last year, 2 years ago, and there will be a lot of confusion. So that is one of the things that I try to do for newbies to make the learning process easy. So if you would follow me, I guarantee you will be good. And if you want to learn faster, as well make money while you learn, you can sign up for my mentorship and you can join my Telegram. The link will be in the description box below. You can sign up for my mentorship. If you have passion for trading, you should take it seriously. Invest in it. The return will be mind-blowing. I'm telling you, it's a guarantee. So when you come to 15 minutes, this is how it looks like. So then what you're going to do is to also put another line here. Put another line. This is the lowest in 15 minutes. So what you're looking at is it gonna break this low or is it gonna push high? So what I like to do, like I said, high low break. This is a low, right? And this is a high. So I'm watching, is it going to break this low? Because if you break this low, then it's coming here with the body. It's coming here. Is it gonna break this low or is it gonna break this high? So if I want to enter aggressively where the market is, I can enter immediately and my stop loss will be here. Of course, I'm not using stop loss, but this is my exit plan, that if market close with the body here, anywhere from here to here, that's when I will exit. So, but if you're trading with a small account, so if market break with the body here, you can exit because it's a small account. But if you do not use a stop loss and it spike down and push up back, you do not lose anything. So, but if you want to be a little bit conservative, so what you're gonna do is to wait for this market to either come down or go up. Once you break this up, this is another high. This is internal high. It's not the main high. It's the internal high. So if you break this high, then you enter aggressively. So when you enter aggressively, bear in mind that it can still come back here. So is it that you enter aggressively or you wait for it to come back here? But the thing with it coming back here again is that it's 50-50. It may not come back here again because it may, and when if once it did not come back here again and start pushing up, you have missed the market. Because if you enter anywhere here and if you're trading, let's say with $10, and the market decides to push, come back here again, it can liquidate you before it starts going your way. So it's always better to enter aggressively and be watching it, watching your equity, your margin. When it breaks here, you enter aggressively, or you put a pending order here. You put a pending order here on this line and put another one on this line. Trading is a risky business, so you must be willing to take that risk. You must be willing. So after you have done your analysis and you have your bias, go ahead and execute. Take that risk. If it play out the way you have anticipated, fine. If it did not play out the way you anticipated, you try again. You find out where you have made mistake, what is not working out well, what is working out well, and then you try again. That is how to do business. That is how to trade. Even in business, they don't make it all at once. When it comes to business, they give it time, for it to grow. So see this as a business. This is a pure business, and it's a good one because you're the boss. You determine when to sell and when to buy. So that's that about that. In my next video, I hope this is clear enough. And if it's not clear enough, send your questions, send your requests. I'll be so willing to make more videos in more detailing. In my next video, another area that I would like to emphasize and guide you is how to calculate your PIP on gold. It's different when it comes to gold and other currency pairs. It's quite different. So once you master how to calculate PIPs and how to calculate your risk to reward ratio, risk management, and all of that, you're good. So that's it from me for now. See you in my next video. Bye for now.